Hi, guys. This is CT Johnson, the funding doctor, welcoming you to day 143 of the pandemic. Today, we have Damian Kininmonth from Preston Rowe Patterson, one of the top valuers in Australia, who is talking to us today about how the pandemic has impacted property prices and PRP as a company and all of those things. So, welcome, Damian.
Thanks, CT.
And can I get you to give us a 10-second overview of PRP and, a little bit about you as well?
Okay. Well, Preston Rowe Patterson, in my view, is one of Australia's premier valuation firms, not just because of the geographic coverage that we have, but also the diversity of work that we do. We act for private clients, small, medium, large businesses, state, local, and national governments. So our guys cover a wide variety of work, flows from a valuation point of view. And I think what sets us apart in our 28 office network is that each of our offices are individually owned. So the guys who own the office have a real drive to provide quality service and expert advice. So yeah, that's us. I 30 years in the valuation business. Probably one of the, at an age where I saw the 1990 recession that we had to have and the impact that has. And
Yep.
that's how it colours what's happening now.
Yep.
Most valuers, unless they're in their 50s like myself, have never actually seen a decline really in property values. So
Yep.
This is not new to some of us.
Right.
But yes, I'm a national director, but also a director of the Melbourne office.
And so tell me maybe a little bit about how is that experience from the 1990s? How is that informing the view that you and the rest of the folks at PRP have about valuations? Maybe you could talk about that a little bit.
Okay, well, I think the great thing about the 1990s compared to today is that the government today acted very quickly in conjunction with the financial system to provide safety nets. 1990, it was a free-for-all. It was a bloodbath. Financial institution banks were selling people up left, right and centre the moment there was a sniff of an issue. With JobKeeper and all the things that the state and local national governments have put in place, we are going to have what's known as an economic flattening of the curve as well.
Right.
We're not going to see that fall off a cliff, complete disaster. What we are actually seeing is a gentle decline, and it is hoped that, I assume that this is what the government's hoping, is that in 6 months' time, we are going to spread the pain out, but it will give people time to adjust and reevaluate what they're going to do with their properties and how they're going to run their businesses.
Yeah.
So that is completely different to what we've seen in the past.
And how much of an impact have you seen it have on property prices? And I know that's a very broad question. I mean, each area tends to be different. I can see you smiling already.
Yeah.
That's a very complex question, but I'm sure it's one you get asked all the time. So how are you seeing it impact it?
Well, I'll use our Melbourne office as an example. We have weekly meetings to discuss how the guys are seeing what's happening on the ground in their particular markets, whether it's inner Melbourne, outer Melbourne, commercial, industrial, retail. And as a general rule, and this is very general because valuers never like to speak in generalities, but
sure.
Worst case scenario for the majority of properties, 5% decline.
Oh.
Yeah, it's not that much.
Yeah,
and as I said,
bad.
this is the whole flattening the curve. There's not a lot of information out there, and that's why we have to, we have these weekly meetings to discuss what's happening in similar socioeconomic, geographic sort of style areas. But the reality is not that great. However, we are seeing certain pockets that are impacted more than others. And they're always the same pockets. They're the high risk real estate, your development sites, those sorts of things. And it's not because there's not going to be demand for the product at the end, but just things like holding costs and things like that get blown out because people can't get their DAs because local governments are not working, they're not working at the same level. So it just blows out that sort of thing. On the positive side, we're seeing, government owned or government leased premises are showing great demand by investors because, here we have gold plated tenants, generally speaking, not huge increases in rent on a year by year basis, but fairly confident that the state government or the federal government aren't going out of business anytime soon. So those sorts of properties are actually doing really, really well.
Ah, that's interesting. That is really interesting. And so geographically, do you see that the impacts, it sounds to me, and I'll sort of synthesize what I heard, is it sounds to me like it's kind of the normal pattern that we would expect to see, which is the urban areas, the East Coast cities, they are holding up better, and the further away you get from that, the more regional you get, or something like that, you get into a second tier city, that those are showing more volatility. Is that a fair kind of summation?
Well, I think well, once again, it depends on the size of the city.
Yep.
You remember that, from an agricultural point of view, we're doing very well at the moment. So a lot of the cities that have got farmland around them, the farmers are actually doing, as a general rule, have come out of drought, doing reasonably okay. Of course, we had the double impact of the fires in January or November through to February, March.
Yep.
So those tourism areas, they've had the double whammy. Fires during their summer holidays, COVID during their Easter holiday breaks. So those people are really, really doing it tough. The positive, of course, is that no one's going to be going overseas anytime soon. So the chances are that if you can get through this period, your September Christmas holidays, you're going to be inundated. So that's a bit of a silver lining, I guess.
Yeah.
But generally speaking, no, even my regional offices are not talking major downturns in values, except for those that were hit by the double whammy of fires and the impact on tourism.
Right. One of the things that's been interesting, and I've talked with some of the lenders about this, is, and I had mentioned to you previously, sort of this idea that there are some valuers out there who, because they have been spooked, and because it's an unfortunate fact that valuers get sued when the valuation, they put a value that's higher than what gets realized, and nobody sues you for, putting one that's lower. And so there's sort of a tendency towards conservatism that breeds into a lot of people. And some of the valuers out there, the reaction that they have had is they have kind of done the double jeopardy thing of, they look for recent or maybe even not so recent transactions which are on the low side, and then at the same time they project forward and say, okay, if we have a 5%, 10%, 20%, pick a number, decline, what does that do? And basically it becomes the lesser of those two. And it was interesting when I was talking to the lender about that, because I said, how is it that you guys are dealing with it? And he said, it's actually something that we've started talking to our valuers about more openly, is to say, don't do that, right? Because what we need is the most accurate picture you can give us, and then I'll put the risk premium on it. But how is PRP dealing with that, or have you run into that?
CT, this is a conversation that we have with our valuers all the time. I mean, the reality is, I have never yet had a lender come up to me and say, Damian, be conservative. They've never had that. Never once in 50 years. The idea is that the lender, their job is to lend money.
Yeah.
But what they want to do is they want to lend money with the greatest knowledge that they possibly can. And I think this is where the really good valuers are coming into play, is that they're not just putting the generic statements in. They are actually putting the colour and movement as to what's happening in the marketplace.
Yep.
I think we all know that COVID-19 is going to have an impact. And there is no doubt that some areas are going to be more impacted than others. But it's not the valuer's job to go, okay, this is what I know and this is what I'm projecting, and so therefore I'm going to put a 10% or 5% further discount. That's not our role. Our role is to value time and place.
Right.
Now, if, for instance, we're talking about a tourism area, and you're saying, well, okay, time and place, you've had this impact, people aren't going to be moving into this location for the next 3 months. Retail market is going to soften further, but right now, this is where it's at. That's what the lender wants to know.
Yeah.
They don't want us to do that double jeopardy, because that just crimps their decision-making process.
Right.
The property is only one aspect of the lending decision-making process. And if we crimp that, well, then the lender can't do their job properly.
Yeah.
So no, I have never had that as a question asked of me of any lender. If anything, it's the opposite direction.
Right. They want it to be higher. Yeah. No, that's true. That's true. Which actually brings me to another question. So you guys do a lot of work with private lenders, which some of the other or non-bank lenders, if I can call them that. And you know, some of the other valuers, they do less of that type of work. Why is it, you know, how is it that that's evolved, that you guys do so much work in that space?
I think the reality that we had is that the lending landscape changes.
Yep.
We are no longer just going to have the 4 major banks and the minor banks. There is a raft of different lenders out there meeting a raft of different needs. What we as an organisation looked at was, what is it that those needs are? As a private lender, you don't have the infrastructure of a CBA, for instance. You don't have the depth of resilience. So you need to have better information. You are wanting to talk to your valuers. And whilst a lot of firms have been sucked into isolating their valuers from their clients, we have actually gone the other way and said the more communication that we have with our lender clients, the better knowledge they have. And, you know, therefore we are not going to have that risk premium against our valuations, because we are going to be all working together for the same result. Same as what I said earlier, I've never had a private lender come up to me and say, Damian, I need more on this.
Right.
That's just, because of those conversations that we are having, they go, right, we trust what you're saying. We understand where the value is, and we can make our decision-making process. So as a company, we recognise that if we wanted to be premium valuers, we provide premium service, and part of that is that communication.
Yeah.
And so we're not afraid of the private lender market. Having said that, we do our due diligence on all our clients, because we want to work with professional people as well.
Sure. So then shifting gears a little bit, one of the things I get all of the time is, you know, with clients who are coming up and they worry about how their valuation is going to turn out and whether it's going to support the lending that they're seeking, particularly. What do you see as the biggest value killer when you're valuing a property, or what makes values come in lower than expected in your experience?
I think, well, I guess having false expectations from the starting point is always the danger. Information is king. I had, you know, and unfortunately there are sites out there that, you know, you put in your property address and with a few basic algorithms, it will spit out a figure. Now, on the whole, some of those sites are very good, but they do not cater for every property. So if your property, for instance, is bigger or smaller than the average, but it still has 3 bedrooms, 2 bathrooms, it's poorly presented, it's not well maintained, it's situated in a street which is poorly maintained, those sorts of things are not going to be picked up by an algorithm.
Right.
So it's really information is the key starting point. The next thing is those physical things. How is the presence of your house? Or let's use a house as an example. You know, have you maintained it? Is the garden mowed? Has it been looked after? You know, have you kept the maintenance up internally? Have you done the constant upgrading that you would do as as a homeowner that takes pride in your property. If those things are done, your property is going to fit in that spectrum. If you do more than that, you're going to get better than anticipated. But the reality is, is the biggest danger that I find is poor information.
Yep.
One of the questions, CT, that we always ask, well, I always ask when I go out and say value a residential property, what's sold in the area? Why do you think your property is worth what you do?
Yeah.
It's not because I don't know. It's I want to see the level of information that these people have. So they might say, oh, well, the house across the road sold for 550,000 last week. That's what they had it on the market for. So I think my house is the same. So I think my house is worth 550,000. And you go, right, well, that's interesting because our records show that it sold for 500,000.
Yeah.
It was on the market for 550, but sold for 500.
Yeah.
And it's getting that level of knowledge right. And people go, well, okay, well, if I think I said the house was similar to mine, so 500,000 is probably about right.
Yeah.
So it's knowledge.
Yeah, I mean, I would really resonate with that, because one of the things that I tell my clients when they're concerned about valuation, one of the big things is focusing on the information. And frequently they have either they have information that is not easily accessible by the valuer, or they're ignoring information that they should be considering. And in either case, it is a common occurrence in my experience that both of those situations lead to a valuation that's not what they expect. So one of the things I try to tell people is say, look, gather as much information as you can, right? And if there are problems, particularly, make sure that you have explained the mitigations, what they cost, how it's worked in other places, all of those things, and make it into as strong a case or as strong a picture as you can about why this property is what you say it is, as opposed to, I had a thing, earlier, I guess last year, where the guy came in and it was a big property in Queensland. And, there was a lot of stuff about drainage on there. And I worked tirelessly to figure out what in the hell that was all about and how much it cost. And is this a big deal or is it a small deal or whatever? And we just never were able to get sort of clear information about that. And the guy was unhappy with the number that came out. And I just thought, I mean, like, I get it. I get why you're unhappy, but you're assuming knowledge that I can't prove to the valuer doesn't have in his hand, and therefore he's probably not going to act on that. So, so I agree with you, right? It just more information and a fuller picture is probably always better.
Well, a classic example of something like that is, valuer goes into a person's house, water damage to the ceiling. Water damage to the ceiling, that looks terrible.
Yep.
But if you've got, well, yes, there's water to the damage to the ceiling. We had a rainstorm 2 weeks ago. We've had the insurance company come out. It's covered by insurance. Here's the documentation. It's not going to be a risk. In 3 weeks' time, the plasterer is going to come in, take out the plaster, do it all. You can put that in a report. And guess what? That's going to give a lender a lot more comfort than the fact that there's water damage to the ceiling. God knows how long it's been there. These people aren't maintaining their property. Different picture altogether. It's all about telling the story to a certain extent.
It really is. It really is, and it's interesting because, of course, I'm dealing more on the commercial side and on the larger, sort of numbers. But it is something that it operates at that level just as it operates on personal residences. Is people frequently are not telling a story or presenting a story with the appropriate support, and they get a result that maybe is not what they're expecting.
Well, a classic is, and it's particularly relevant right now. If you go into a retail shop, for instance, the owner owns the property, it's leased out, you walk in, empty. Why? Most of the retail shops in Melbourne and Sydney are empty. But there's, building works being done. You're going, oh, Jesus, the tenant's moving out. What's going on?
Right, right.
What we're actually finding is a lot of tenants are using this downtime to refurbish their premises.
Yeah,
So, there's actually a positive story taking place right at the moment. It's not that the tenant's moving out or there's trouble. It's actually a positive story.
yeah,
So if you've got these sorts of activities taking place, let the valuer know, and we will take those sorts of things into account.
yeah,
As I said, particularly at this particular point in time.
yeah. All right, very good. Is there anything else that we haven't covered that you'd like to touch on? Anything that, piece of advice that you have for property owners or developers out there about their valuations or about COVID-19?
I think that the underlying message for anybody is information. If you're a commercial owner of a property and you've got a lease, a tenant, have a copy of the current lease available with the current rental. If you've made an arrangement with your tenant to cover this COVID period, let us know. It's not a deal breaker. And most of these things are, okay, we're going to have a rent relief for 3 months or 6 months. That's fine. We can facilitate that in the valuation. Like everything, I think you've touched on it, the greater the level of uncertainty, the greater the level of conservatism that will most likely take place. So the more touch points that you can provide to the valuer, the more information they have, the more comfortable they're going to feel about the property, the greater the better the valuation outcome.
Yeah,
Whether it's in the value itself or in the story behind the valuation.
yeah.
Because it's not necessarily just the figure that lenders are looking at; they're looking for the story as well,
Yeah.
and more so in this market.
All right, very good. Damian Kininmonth, thank you so much for joining us. Really appreciate those insights. Those are really, really great.
No problems at all. So take. Have a good
All right,
time.
take
Stay
care.
safe.
Cheers.
Cheers.